Plus, rolling the dice on Domino's Pizza. Shares down over 10% in 3 months, but it may be time to buy. The desk debates it in our call of the day. The Halftime Report with Scott Wapner and the Traders is back in 2 minutes.
London, switch to Vodafone, the UK's best mobile network, and Be Unlimited, because the best phones deserve the best network and our new unlimited data plans. The future is exciting. Ready? Vodafone.
Max download speeds apply to unlimited data. Best network as voted by readers of trusted reviews. Terms at vodafone.co.uk/unlimited.
The relaxing sound of fresh, cold running water. And you can have it in your kitchen. With amazing savings on Samsung fridge freezers at Currys PC World. Like the RB31 with its chilled water dispenser for only $399. Or upgrade to the Samsung RS8000 American-style fridge freezer with water and ice dispenser. A huge 609 litres of storage space. At just $1,049. How relaxing. At Currys PC World. Energy rating A+. T's and C's apply.
I want Poppy to play cricket for England.
I want Sam to stop screaming.
I want Joe to live a little.
I want Naomi to live a lot.
I want Becky to invent a cure for the common cold.
Whatever the future holds for your children, Vitality Life Insurance want to make it happy, healthy and secure. So when you take out our Wellness Optimizer, you'll get up to 40% off your life insurance premiums.
I want the twins to keep on being happy.
I just want whatever the twins are on.
Just search Vitality Life Insurance. Additional product, minimum monthly premiums and conditions apply.
Welcome aboard Europe's 169th safest airline.
You were like my 169th biggest crush in school.
Your total body age is 169.
The number 169 never screamed glamour until now. Get the Toyota Aygo X-Play for only £169 deposit, then £169 a month with 0% APR representative. Just go. Aygo.
0% APR representative on new sales of Aygo X-Play over 48 months. £169 per month. Customer deposit of £169 when proposed and approved via Access Toyota by 31st of October 2019. £3,487.50p optional final payment. Subject to status to over 18s. Indemnities may be required. Conditions apply. Toyota Financial Services.
College football is live on TuneIn. Listen for free to games from more than 140 schools all season long.
To the 10, all the way to the checkerboards, but he stays on his feet and scores this time.
What's happening in college football this week, this Saturday? The scoreboard will be working overtime as Sam Ellinger brings his vaunted Texas Longhorns passing attack to West Virginia for a Big 12 conference matchup against the Mountaineers. The action starts at 3:30 p.m. Eastern. Just search college to listen today.
Welcome back to the Halftime Report. I'm Eric Chummy with a market flash on Cedar Fair Amusement Park Company. 2 days ago, they got an offer from Six Flags to get bought out at $4 billion, and now reports out that they've rejected that offer. The stock with a big intraday move in the last few minutes. There you can see it spiking up about 3% up in the last several minutes. That is Cedar Fair turning down the $4 billion offer from Six Flags. Scott, back to you.
Okay, Eric, thanks so much. That's Eric Chummy. Big interview coming up right now. Let's get to Steve Leisman. He is live from the Boston Federal Reserve with a first on CNBC interview. That's the Boston Fed President, Eric Rosengren. Steve?
Scott, thanks very much. Yeah, we are inside the Boston Fed here with Eric Rosengren. President Rosengren, thanks for joining us.
Nice to be here with you.
Job growth this morning coming out below expectations. The street looking for 145, came in 136,000. But the unemployment rate falling to 3.5%, a 50-year low. Give us your initial reaction to this jobs data this morning.
So as you highlight, the unemployment rate is quite low at 3.5%. Over the course of the summer, it was at 3.7. So the household survey was a little bit stronger than the payroll survey. I think you have to keep in mind exactly where we are in the cycle. So we have a very low unemployment rate at this point. We're relatively close to 2% inflation. So the kind of job growth that you would expect if you're trying to keep the unemployment rate basically constant, the inflation rate constant, would be in the range of 90 to maybe 115,000. So we're getting to the point where we're getting about the kind of employment growth that I would expect in kind of a stable economy. I think the bigger question is whether it ends up being weaker from here, and that depends importantly on what happens on the consumer side of the economy.
When you look at the level of job growth, do you want to bring it down? Do you want it to be lower? Do you want the unemployment rate to be stable or higher? Why can't we go lower on the unemployment rate?
So there are a couple reasons why we get concerned if so the committee as a whole thinks that the median estimate for where unemployment rate would be over the longer term would be 4.2%. So 4.2, 3.5, we're already pretty tight.
But let's be clear about
and the
this.
reason for that is twofold. One is in periods where the labor markets are quite tight, we expect over time that wages and prices will go up. So core PCE has gone up from 1.516 to 1.8. Core CPI has gone from 2 to 2.4. So we have seen some movement in prices. We also have to worry about financial stability. So you press the economy too hard and you start finding different pockets of the economy starting to have more troubles than you expected.
I was just going to interrupt before as a kind of informational note here that the committee has had a differing view on this, what the right level of unemployment is. We used to be above 6%, and we're learning now, aren't we, that we can operate this economy at a lower unemployment rate without inflation?
It's definitely true that the estimate of what the unemployment rate would be in the long run has come down. That does move around for a variety of things, and it includes kind of what the demographics of the population are. So different age in the population does make a difference. The amount of immigration makes a difference. Population growth in general makes a difference. Education makes a difference. So all these factors are things that go into thinking about how tight can the labor market be before we start seeing wage and price pressures.
Let's talk about the broader macroeconomy. When you look at a number like this, you look at where the job market is. But we've had two key indicators this week, the ISM service indicator and manufacturing, both weakened from where they were certainly last year. What's your overall outlook for economic growth?
So my overall view is it's going to be around potential for the second half of this year, so the third and fourth quarter. My estimate of potential is around 1.7. That's pretty consistent with what the private sector expects for the last 2 quarters of this year. I think that data that we have is weaker than it was before, but it's actually pretty consistent with getting around a 1.7. If we start getting much slower than that, then that implies a rising unemployment rate, and then we would really want to think about what's happening in the economy. I would say that some of the data that we've gotten over this week's not a complete surprise. So we know that tariffs are having an effect on the economy. We know that the manufacturing sector globally is being impacted by what's happening with trade. So we would expect that exports and manufacturing would be weak, and that's exactly what we're seeing. The bigger question, I think, is does it spill over to areas not directly affected by trade concerns? And that would be, is the consumer still confident enough that they're going out and spending? Up to now, we've had pretty good consumption. Wealth is still pretty good. Personal income's pretty good. So there are a lot of factors that you would normally think would be dominant for the consumer that actually still are indicating that we should see pretty strong consumption. But there's always the concern that some of the concerns that are occurring from trade, from some of the headlines that you just referenced, might start causing consumer confidence to ebb. And if that really does occur, then we have to think about whether the economy would slow down from here.
People talk about the Fed and the trade war in the following way, that the Fed needs to deal with the effects of it, but shouldn't enable it. Is that your idea?
So we have a mandate. The mandate's tied to inflation and unemployment. So if we don't think we're going to get maximum employment, or if we think we're going to miss our inflation target by a lot, then we should do something differently, regardless of what the source is. So we don't control fiscal policy. We don't control what's happening globally. We should react to those things and try to make sure that, as best we can, we keep the labor market and inflation on an even keel.
We talked about the job market. We talked about the trade war. What's your outlook for policy in context of all these things? The market seems primed right now for a rate cut. We came in before this interview. It was running at about an 80 or 85% probability of a rate cut this month. Do you think that's the right course?
I still have an open mind. We still have more data between now and when the meeting actually occurs. I'm going to be quite attentive to what's happening with anything that indicates that the consumer is changing their view. We had an auto report that was reasonably strong. So if we were really worried about the consumer getting very concerned, you wouldn't have thought auto sales would be quite as strong as what we saw. So we'll have to see how the consumer is continuing to react. We'll have to see what's happening on the price side as well. So I think there's still a little bit more data before the meeting. I don't think I should prejudge it at this point. We've already had 2 easings. The easings don't have their impact immediately. Monetary policy currently is accommodative. So in the longer run, we think that a Fed funds rate around 2.5% would be the appropriate long run federal funds rate. We're now below 2%. Fed funds has been trading around 1.9. That's quite a bit below where we think the Fed funds rate should be in the long run. So I think we need to monitor the economy, see if it looks like we're on a stable course or whether it'll be weaker than that.
You've been a lone voice when it comes to the concerns about financial risk when it comes to the rates being too low. What are those concerns, and do you see reasons to be concerned right now about the level of financial risk created by low interest rates and the reach for yield and the moving up the spectrum of risk by investors?
So I do worry about the incentives that are created when you have low interest rates. Low interest rates in a recession doesn't cause a lot of financial stability concerns because both households and firms are pulling back. And so you don't have a lot of risk taking. In fact, monetary policy is trying to encourage more risk taking at that time. When you have an unemployment rate at 3.5%, when you have a stock price that's still very high, then that's a situation where I don't necessarily want to encourage households or firms to take on a lot more risk. The household sector doesn't look all that risky right now, but I would say that the firm side does. That leverage is quite high at a wide variety of firms and industries, and corporation debt is quite high relative to what we've seen historically.
You talked about this issue of co-worker space, which is WeWork, the biggest player in that space. They seem to have pulled back from an IPO. Are you a little more encouraged from, actually, since you made that speech and what's been happening, are you still concerned about what's happening in that industry?
So I gave a speech at NYU that talked about the financial stability risks from this co-working space. And it's really the idea that you have long-term leases, but you're providing short-term leases to individuals or small companies that if whenever we do have an economic downturn, might be some of the first people to be unemployed. And in that kind of situation, we should worry about whether that space would become more vacant quickly or more quickly than we've seen in the past. So I think we do need to think about the model itself. It's not necessarily specific to an individual company, but really thinking broadly about what is the incentive of a landlord to provide a longer term lease to somebody who frequently has a bankruptcy remote structure so that they can walk away from that lease. What are the times that will occur, and what does that mean for the economy overall?
Eric, just a quick thing here. The conference you're having right now is looking at something the Fed has to deal with. You have one tool, but one country with many different places that are have different economic levels of activity and changes. How do you deal with that? You have to change rates up or down for the whole country, and yet what you're studying here shows that, for example, urban centers are having a very different outcome from rural places.
So that's exactly what we are studying, is the experience in Boston, for example, is somewhat of a super city. We have a lot of young people. They tend to be highly educated. Their incomes are growing quickly. But you get to rural New England, you get a very different experience in upstate parts of Maine or Vermont. And as a result, we're seeing big disparities in outcomes. Monetary policy itself is not a particularly good tool, but I think we do have to think about other ways that we make sure that we don't just think about the economy overall, but we make sure that some of these geographic disparities over time get reduced. So traditionally, economists thought we'd focus on individuals and job training and that people would move to where the jobs are. Increasingly, we're seeing we need to think about how to get the jobs to the people because the people don't move as much as we would think.
Eric Rosengren, President of the Boston Fed, thanks for joining us.
Thank you.
Thanks for having us here inside the Fed. Scott, back to you.
Steve, I have a question for you while we let Mr. Rosengren get off to the conference that he's there for. So we already had two cuts, he said. We already have rates that are accommodating. It takes time to see the results of it. You had Clarida suggesting that the economy's in a good place. Rate cuts put us in a place we need to be. Williams says monetary policy is in the right place. Is the market ahead of itself in thinking that these rate cuts are a foregone conclusion? Because those comments from those three important people would suggest perhaps otherwise.
I think that's a good question, Scott. It's something that I'm trying to figure out for myself. I've always been concerned that the market gets too far ahead of itself when it comes to pricing in rate cuts by the Federal Reserve. Sometimes they end up being right, sometimes they end up being wrong. I think at this point, Eric Rosengren pointed us to an interesting metric, which is to watch the consumer. And it's not rocket science in the sense that the consumer has really held up growth. And that's why today's job number is so important to me today, because if you can settle down at the level we're at, I think we're going to be okay. If we start going lower and jobs become a concern, they start to undermine confidence, then you could see the consumer give it up here. So Eric pointed to this idea of 1.7 being his outlook. Other folks are at 2.25. You could imagine them doing this one more rate cut. It's that fourth one, Scott, as you know, I was on the show yesterday. That's the most interesting to me. When I see the market price in a fourth rate cut this year, that's when I think it's getting ahead of itself.
Yeah, you asked great questions, but Rosengren asked maybe the most important one that we're all thinking of ourselves, and that is tariffs are having an impact on the economy. Does it spill over into the consumer? The question you're thinking about every day, and that's the premium one for investors to consider.
I think that's right, and we did see some impact of the trade war in the jobs number today. It's probably a big part of what's responsible for what's happening with manufacturing, where job growth in manufacturing, Scott, is a quarter of what it was last year. And there's other places we might be seeing it as well. So I thought it was interesting that the idea the Fed has to accommodate it, but it really can't do anything on the front end to try to keep it from happening. Another idea that I think Eric was suggesting, by the way, in the last answer, more fiscal help, more ideas that the Congress and the president deal with some of these issues and not the Fed, because of course the Fed has just the single tool, which is the interest rate for everybody.
Yeah, good luck with the Congress dealing with anything, given what's going on in D.C. Do you have time for one more question from Joe, or do you got to split?
I actually do. I always have time for a question from Joe.
All right, good stuff, Joe.
Thank you, Steve. So can we expect the Fed to react or respond to any positive development on the October 10th and 11th meeting between the U.S. and the Chinese?
You know, it's one of those things, Joe. I think you would deal with it just the same way. It's like you got to deal with the set of cards that you're given here, right? And if all of a sudden you have a situation where things look like they're going well, there's been some progress, and the market buys into that progress, I don't think the Fed's going to have much of a different conclusion here. The ISMs, I think, are something that the Fed watches as survey data, but I believe that it most likely is going to want to see that translate into the kind of weakness in the real data, the harder data, not the soft data, as to what would actually animate policy by the Federal Reserve here. So I think you're right to point to those things, but I throw it back at you, Joe. At what point does the market decide that they just cannot believe these developments? If it's positive, I'm going to buy, and if it's negative, I'm going to sell. It feels like we've been on this, I talked about it the other day, this Groundhog Day movie when it comes to trade.
Well, I would say you also don't trust that whatever path is perceived to be taken won't be reversed if there's something that the Federal Reserve, that basically the administration doesn't like. There you get the reversal, just like we did on August 1st.
Steve, we appreciate it. Thanks for bringing that interview to us. You can answer the question. I'm sorry. I know we have a little bit of a delay, but you can finish your thought. I don't mean to cut you off.
I wasn't going to say anything. It's been my observation. What is the range? 2,700 to 3,000, and we act when we're near 3,000, and we come down off of there like we haven't done this all again and again and again. Ultimately, I think you either have to make a decision not to trade it at all, or just to sit on the sidelines. I think that seems like at some point you either decide that there's going to be a deal, there's not going to be a deal, and then you threw it right back at me, Scott, which is, can you afford to sit on the sidelines if there's a positive development and the market goes for it? I'm just getting a little tired of it. I got to tell you.
Yeah, I think a lot of people are. Steve, we appreciate it. It's a big day for Fed Speak because we have Loretta Mester, the Cleveland Fed president, on Closing Bell with us. It's an exclusive interview, and that's at 4 p.m. Eastern Time. We're looking forward to that. We'll have her react to Mr. Rosengren's comments, as well as react to the jobs report today and where she sees the economy and interest rates heading from here. Our thanks to Steve Leisman. Let's get the headlines now from Sue Herrera. Hi, Sue.
Hello, Scott. Hello, everyone. Here's what's happening at this hour. Secretary of State Mike Pompeo continuing his European tour, traveling to North Macedonia from Montenegro, and he's meeting with that country's leaders. North Macedonia is seeking closer ties with the West, and it will soon become NATO's 30th member. Here at home, the Supreme Court is adding an abortion case to its busy election year docket. The justices have agreed to take up a Louisiana law that could leave that state with just one clinic. They won't hear arguments until the winter, with a decision likely to come by the end of June. Democratic presidential candidate Elizabeth Warren raised $24.6 million over the past 3 months, relying largely on a massive small donor operation. It is just a bit less than the $25.3 million that her rival Bernie Sanders posted. And Lincoln is unveiling its 2020 Continental Coach Store Edition featuring center opening doors. Prices starting at $115,000. Customers can place their orders starting this morning through the end of the month. And last year, all 80 limited edition units sold out within 48 hours. You're up to date. That's the news update. Scotty, back to you.
Wow. Sue, thank you. That's Sue Herrera. All right. Domino shares are down more than 10% in 3 months, but could now be the time to buy them. The desk is going to debate that straight ahead. And our call of the day, halftime report, is back after this quick break.
There's golf. And there's the golf lifestyle.
Today, your information is more exposed than ever. When you shop, sign in, or browse, you could be vulnerable to cybercriminals. More online threats demand more protection. That's why new Norton 360 provides multiple layers of protection, combining device security, secure VPN, password manager, and cloud backup all in one solution. Get new Norton 360, starting at $24.99 for the first year.
The nights have started to draw in. And at DFS, we know that can only mean one thing. Everyone will want to spend more time at home, getting nice and cozy. Ah, you can't beat it. That's why all our sofas are handmade to order, and many are guaranteed to be delivered in time for Christmas. So you can look forward to cozying up this winter, knowing your new sofa won't let you down. DFS.
Ticket to the 2019 MLB postseason. Featuring the home and away feeds for every game, TuneIn Premium delivers every call of the ALCS, NLCS, and the 2019 World Series